Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on January 31st. My name's Ian Saunders, and joined here by David Clark. David, good to be on here virtually with you.
Yeah, glad to. Been a while since we've done one of these virtual ones, but also at the same time, I'll admit it's hard to believe we've almost got the first month of 2025 knocked out. It truly felt like just yesterday the calendar changed, honestly.
I know it's crazy. I saw an email a coworker said, still said Happy New Year, and I guess you can say Happy Lunar New Year today, because we're recording this podcast on the 30th, so on Thursday, just after the start of the Lunar New Year, the Chinese New Year. So maybe we'll just say that Happy Lunar New Year, David.
Yeah, semantics overall, but we at least have some interesting things to talk about this week. It's sort of it admittedly maybe was quieter comparatively speaking in past weeks, but it's been an eventful week this week for sure.
Yeah, it definitely has. I mean, coming in at the beginning of this week, we do a recap together as an analyst group about, hey, what's some interesting stuff on the docket going on this week. There's a lot of interesting stuff on the docket heading into this week. And then, of course, we got a lot of interesting movement kicking off the week. I mean, just looking at from a performance perspective, I mean, you have at this point over the past week, the NASDAQ 100 dropping almost 2%. But semiconductors still down over 7% over the trailing week. And we saw a lot of negative movement from semiconductors on Monday specifically. A lot of the big names showing some sharp downside movement on the back of some of the DeepSeek news that actually came out earlier last week, but really kind
I
of
was getting ready
formed.
to say that. Isn't that the interesting part? It came out last week, but it really didn't catch a lot of fodder until this weekend.
Yeah, I mean, maybe it took some time for people to play with it and really see what the potential could be or how it could think about how it could be potentially affected. But that is always a little bit odd to me when I see news that had been out in the ether for a little while and then all of a sudden
Mhm.
causes a major movement. But a major movement is certainly what it caused. I mean, we saw looking at just the broad semiconductor representatives, we can look at individual names, but just to look at the broad representative as kind of coverage for the space, looking at the VanEck Semiconductor ETF, ticker SMH. I mean, you saw a lot of sharp downside movement from a lot of areas, but I mean, that chart moved from, it did break a quadruple top earlier this month up at a chart level of 265 and fell back lower, but I mean, didn't fall as lower as headlines might lead you to believe. It did move to a sell signal at 240, fell a bit lower, but found support from November of last year at 235, and it's kind of held that support at least over the past couple of days, David.
Well, and I would imagine in some cases, most people might be a little surprised to see that this pullback, at least broadly speaking, wasn't a little more. I mean, as you said, individual names, there were sort of varying degrees to how far some fell, some affected more so than others. But as you noted, broadly speaking, you saw a fund that found support and yes, it fell to a sell signal, but we didn't see any further impacts to sort of the technical picture breaking down. So silver lining there at least.
Yeah, and so that chart has really just kind of been moving sideways since September of last
Mm-hmm.
year. I mean, we saw
Mm-hmm.
obviously a lot of improvement from semiconductors over the past couple of years, but for the past couple of months, it's just kind of been moving sideways, and we just kind of got a little bit more of that consolidation over the right at the beginning of this week. I mean, that support level for semis are holding at this time. Some of the different names are moving around a little bit differently over the past couple of days, but I think that does speak. Semis were not the only area to show some weakness. Now, the weakness did not persist across the broader technology space like you might have
Mm-hmm.
expected. A lot of the software stocks didn't fall that much, like a percent or two. Some of them, I think Meta actually posted a new high at the same on Monday, which we'll get into more of that movement on the back of earnings in just a sec. But other areas across the market was the semiconductors and then utilities. David, I know is a sector that you follow pretty closely. Some pretty wild swings for stocks that you wouldn't normally think to be quite as wild.
Now, so since last summer, and some may be familiar with this theme, there's been somewhat of a correlation between the semis names that are involved within the AI space, as well as a lot of nuclear power companies, because the thought is these nuclear power companies are going to then power these AI data centers. But you've seen a lot of names take attention because of that, and sort of Constellation Energy is probably CEG is probably the largest among them, but the darling of the S&P 500 last year was Vistra VST, and while most may look at some semiconductors names that were down a little more than 10% or maybe down roughly 10% on Monday, Vistra was down almost 30% during Monday's trading. And while it did take it, brought it back to a sell signal, technically completed a bullish signal reversal pattern there, took out a few more support levels, but in some fashion, for as volatile as this stock is, that's not all that surprising in some way. It's done it before, but again, also found some nice support here in the lower 130s. And again, somewhat surprisingly, has almost gained about half of that back in the subsequent 3 trading days. So
Right.
almost I don't want to say it was a non-event because obviously it was an event and provided some true trading opportunity here. But if we look out next week, you may look at the chart and say, "Wow, it just had a pretty good pullback there for a little bit."
Pretty good is an understatement, I think, but it was definitely sharp. You said darling of the S&P 500. Why? I said it was up there
It
with
was
some
the
of the best
best
performers.
performing. Yeah, it was
The
one of the
best,
best
the number one.
performing.
Okay.
It was there for towards the end of the year, if not the best performing among the top five. I mean, it was up almost 200 and some percent last year.
Ooh.
Um,
Yeah,
but
trailing year 282% based on market movement through Thursday. You would assume prior to a 30% decline, even though the declines rebounded. I mean, it was well north of that at the end of the year.
mhm. Well, and at the technically speaking, if we're looking just in a vacuum and looking at how the chart movement behaved, I mean, obviously a pullback well below the middle of the trading band isn't what we would normally see, but in some fashion, you saw an exhale, a very large exhale back to a support level, and now it's somewhat rebounded. So, it's a wild example of one that pulled back to support, but in some fashion, it's done that. It's now rebounded a little bit. Hopefully, what most might look for is at least kind of some consolidation. I throw quotations because consolidation for Vistra is very different than consolidation maybe for some other names. But looking for maybe a little consolidation here in this sort of mid 170s or kind of 170 to 160 range. But is definitely a name that you have to keep an eye on very closely. And there
Yeah,
were
I
other
mean,
utilities names out there that saw some downside, but this one definitely took the limelight for sure.
yeah, absolutely. I mean, when you see a stock that's up 300% in a year, right? Seeing it fall 30% now, that's a big one-day move. But at the end of the day, that's not that. I mean, it's so was the move over the prior year, right? And so seeing it move lower and then rebound higher, I didn't think that the utilities related like semiconductor energy companies there on the back of some of the AI data center build out, I didn't think they were going to rebound as much. When you think about the AI build out, you have obviously the first movers, your kind of picks and shovels semiconductors, those that implement the AI being your more software oriented areas, and then those software oriented areas need to get power to power their AI build out using the chips, right? So the energy is kind of the tangential step in that line. Thinking about all of those, when you see technology, any technology growth oriented stock, I mean, those are known for rapid upside and maybe some sharp movement back and forth. Utilities not as much. And I know this is a news story, but when we saw that drop so much and so significantly, I was sitting there thinking to myself, I was like, well, if you're looking to play an area, there's no way these go back, right? They're not going to jump all the way back up right off the bat, but they did. And when in the midst of the turmoil or turbulent market action on Monday, there were some interesting movement that we saw from a lot of other areas. In a normal day like that, where you see a lot of high flyers or big names that a lot of people have followed over the past year fall so much, you would expect a lot of other stocks to fall in sympathy, and that just didn't happen. I mean, the
Mm-hmm.
declines that we saw at the beginning of the week were really consolidated to a relatively small list of names, and some of our indicators actually continued to push higher, but including a lot of the participation indicators that we follow. I know stuff like the 10-week, so we actually saw more stocks moving above their 50-day moving average on Monday. Another one, David, I know that you did some work on the NYSE high low index was another area that has, over the past several days, going back all the way into last week, shown some consistent higher movement.
It has. And surprisingly, looking at Friday's action, where it was where we started that upside movement, but it carried on into Monday as well as even going on into Tuesday. Ultimately, we saw the NYSE high-low indicator suggest that we were seeing more and more and more stocks making 52-week highs, which, thinking about how Monday transpired seems almost a little counterintuitive. But the silver lining there is, in some fashion, that's a short term look there that or a short term view of improving breadth almost.
Hmm.
That we're
Hmm.
seeing more stocks capable of making those 52-week highs. Now, there's still more work left to be done in order to say that we've seen breadth improve truly, but this is one of those things that, while we're seeing larger cap stocks or some of those main names move lower, the broader market somewhat move lower, but stocks are making 52-week highs. That's at least a silver lining that we're hopefully continuing to build on that case of improving breadth, which has been a theme that's sort of been in and out of play at times. So we'll see if we can sustain that and if it actually becomes a sustainable theme or not.
Right. And I mean, what people have been calling for the broadening out for a year, it seems like at this point. I mean, you have the Nasdaq go up 50% in 2023, S&P go up 20% plus. The class, well, that strength has to broaden out. It has to, other areas have to show improvement. Not necessarily the case in 2024. We saw both the Nasdaq and the S&P up another 20%. RSP didn't show that much strength, and really until the end of the year. I mean, you saw small caps and then more the equal weighted diverse representation spike up post election, which is
Mm-hmm.
typical. We see that happen historically sometimes. But it's been a little more, at least for the past few days, you've gotten some more consistent movement higher for some of the more areas are going higher and then not dropping, turning around and heading back lower, right? I mean, that consistency is good to see, especially at the start of a year. I think
Well,
is
and as you said, especially at the start of the year, but also in the fact that we've followed up 2 years in which there wasn't much breadth, and we're continuing to hope that it gets out there and spreads a little or shares the love, if you will, to some other stocks. But even this week, we've seen some stocks at least report earnings, show some positive action. At least maybe reverse trend if they had gone lower on Monday along with the broader market, but have at least begun to see some of these stocks continue to move higher, or at least push back higher after we saw that action on Monday.
yeah, yeah. I mean, when you're looking across so I know we were just talking about some of the small cap stuff, but going back to the big names, right? A lot of the big names are reporting earnings this week. And I think there's been some interesting movement on the back of that. I mean, so you said some of the names moving higher. Maybe we start with the one that isn't Microsoft, right?
Mm-hmm.
MSFT. Microsoft has shown not as much appreciation as some other areas across the broader technology space over the past 6 months. It just didn't show the upticks that other areas did. Moved to a sell signal in August, didn't go back to a buy signal until December. A lot of sideways action. We see Microsoft down about 6% at the time of this recording, after post earnings announcement on Wednesday evening. But I mean, it's still a 4 for 5 attribute name. This change only causes it to reverse down into a column of those, and it's holding that support level at 416 right now. So it's not even moving to a sell signal. At the end of the day, it's not a bad looking chart.
Right. Yeah. And that's sort of the thing is, while initially somebody might look at this and think, oh, Microsoft's down 6% or
Right.
almost 6%, you come and look at the chart here and it's saying, it basically says we just dip back below the 50-day moving average. We're currently holding support. And I mean, ultimately, if you get a reversal up off of this support, long term holders are going to potentially be looking at an opportunity. So,
Right.
it could be, this could definitely be one of those exercise some patience, sort of see how things develop out type of position. But at least most of the other names we're going to talk about here have seen some pretty notable upside action today.
Yeah. Yeah. I mean, we saw Tesla spike up. It kind of consolidating on that chart too. I don't know if we need to run through that specifically, but it's up about 3%, at least at the time of this recording, almost four. Meta, though, another big player, in the AI space. Another four for fiver from an HB perspective. Quite a bit different price movement over the past several months, though. Meta is gave a second consecutive buy signal last week on the 24th and just continued to tick higher. It's now in heavily overbought territory. It's up about 2% at the time of this recording, but it's up at the top of its trading band, reached an all-time high this morning north of 700, which is pretty notable. But it means that's a pretty significant stem that we see Meta on there now.
Well, and what's interesting is another stock that we saw report in earnings that is on a somewhat now similar stem, maybe not gotten as much attention as Meta and Microsoft, but IBM, interestingly enough, has maintained a buy signal since June of last year, and with today's action, rallies up to highs at 260 there, similar to Meta, looking in overbought territory. But is not maybe hasn't gotten as much attention as maybe some other semi names, but probably shouldn't be one that's ignored by anybody in a portfolio for sure.
Yeah, I mean that's a pretty good. You talk about consistency, right? I mean that's
Mm-hmm.
five consecutive buy signals, very consistent improvement throughout the last 6 to 10 months. A triple top breakout, 240 all-time highs, climbing to 260, up 12% at the time of this recording.
Yep.
Um, it's a good looking chart, and not something that you would have. Yeah, doesn't get the attention as you said as a lot of other areas. It's been on significant stems in this rally. So we did
Mm-hmm.
see in August it reversed higher from a low or a double bottom formation at 182 and climbed in a single column of X's all the way up to 236. Pulled back from that level down into the lower 200s. So wouldn't be surprised to see some consolidation here. Wouldn't be the end of the world for those certainly long IBM or looking to get long IBM. Is pretty overbought. Maybe could get a more opportune entry point moving forward.
Yeah, and it along with, let's see here, where do we else see reporting some positive action? Worth a shout out at least, maybe not one of the big names, but earlier this week, United Airlines reporting some positive, uh, or at least showing some upside action and moving to new all-time highs there. But then there were a couple of others we were thinking of that we wanted to mention here,
Yeah, I mean,
earnings wise.
I think the obviously everyone's eyes are going to be on Apple, who's reporting earnings after market close today on Thursday. So by the time
Mm-hmm.
this podcast comes out, Apple will have reported. That stock has shown some pretty interesting move. It moved in almost like inverse to some other areas over the past week or two. It reached a new all-time high up at 260 in December, turned around and fell from 260 down to 220. I mean, a 40-point drop in a couple weeks there, all occurring in January, but held support at 220 from November and turned around over the past few days and reversed higher up to that 240 chart level, which is smack dab in the middle of its trading band. That seems to be a very consistent theme with a lot of these tech names heading into earnings. They're just sitting in the middle of their trading band, right? And so we'll see which way that breaks. You
Mm-hmm.
got overhead resistance at the 260 point, support at 220. So it's really just that overhead resistance matching the top of the trading band, on support underneath matching the bottom of its trading band. So we'll see which way it shakes out. Going into earnings though, Apple has a pretty robust technical picture, strong five for fiver. It's obviously it's got a lot of eyes on it around the AI space too, but didn't show the negative movement that some other areas did. Maybe because it's just using other areas for they're not in the same playing field within AI, right? They're not trying to come up with their own
Mm-hmm.
model. They're just trying to use other models. And so maybe if there's the whole DeepSeek deal was another model potentially knocking off some of the darling models of the US.
Mm-hmm.
Well, Apple's in a position where they don't care quite as much about what model's doing the best because they're just going to
Right.
pick the good model, right?
Yeah, they've not committed all the capital and just the intellectual property or anything that goes into developing or building it. They're just saying, look, we'll take the best whatever anybody
Yeah.
gives us. So,
Which is not a
and
bad play. People were giving them a lot of flack for it, I think, for not diving in headfirst into space like some of their perceived competitors. But maybe I mean, obviously we just look at the prices. We don't mean to, by no means are we trying to be experts on the underlying inner workings of Apple as a fundamental company. But with that said, doesn't seem like a bad idea in hindsight for them to not be as heavy players because the stock price certainly has benefited from it.
Well, and there's the piece is shockingly on Monday, you saw it finish or may not finish up for the day, but moved higher on the day when pretty much almost everything else was taking a step back. So, and the fact that, from a long term perspective, even while the market was taking a step back, or while it was taking a step back, we didn't see it give a sell signal. It's maintained there. So, like you said, we'll see how things play out here. But interesting to sort of see that Apple gives not only a great charting example, oftentimes, but also kind of gives us a look into how some other tech companies may be behaving that aren't so tied to AI and what may be sort of prevalent there and what you may need to look for, listen for as we have earnings upcoming.
Yeah, yeah, yeah. Definitely be a lot of eyes on that, and I'm sure everything we just said about Apple is probably going to go out the window as soon as it reports earnings this
It's only
afternoon.
because we said it.
Right, exactly. I mean, but yeah, David, I mean, with that, like, there's a lot of other stocks that are going to be coming out reporting earnings. A lot of other stocks that have, we don't need to run through them all for the sake of the people's ears that are listening to the podcast. But I think there are a lot of things to keep an eye out for. I mean, times like this, when we have a little bit of uncertainty in the marketplace, are the reasons why we have these technical charts and the technical indicators that we have, right? We're trying to remove the emotion, remove the subjective nature to look at sharp price action and make a gut reaction. We're just going to look at the sharp price action and see how it affects the chart, how it affects the indicators, and then try to keep up with the trends from there, right? I mean, at this point, we've seen continued kind of breadth increases from this. That's the thing that I'm going to be keeping a close eye out here for over the next week or two to see if this breadth improvement
Right.
can be sustained as we head into February. Weird to say.
Fingers crossed.
Fingers crossed. We'll leave it. Maybe we'll leave it there for the listeners this week. So thanks, David, for hopping on, and thanks everyone for tuning in this week. And we'll be back to touch base next week.